So, hello and welcome back, everybody. This is again an exercise case at the end of the withdrawal chapter now. Let's have first a look on what happens. Here is a trader in Essen in Germany, and there are three events going on. In February, he gives his wife a computer from the business for free. The computer had been bought for 1,000 plus VAT last year. The price to which he himself offers it to customers is 3,000 plus VAT first. Now, as the computers have become a bit old, the price has been reduced to 2,000 plus VAT. The current price for which he could repurchase the whole thing from a wholesaler would be 750 plus VAT. In March, one of E's employees wanted to move, wanted to ask, or not even wanted to ask, but dared to ask if he could use one of the vans of the enterprise over the weekend for 2 days because he intends to move and wants to save the costs for renting a van from a professional firm. Now E said, yeah, I don't care, I allow this. And if you make a cost calculation for all costs relating to these 2 days for the van in question, you end up with €200, 150 entitled to input tax deduction, 50 did not. And in April, E sells a computer with historical costs of €1,000 plus VAT, bought last year. Current repurchase price from a wholesaler is 820. His own official shop price for customers is 3,570, and he sold that with a discount of 80% to his nephew N, and the nephew lives in Switzerland and takes the computer there. So that's what's going on. Let's first try to analyze again what happens here. Yeah, okay, so what happens here is quickly explained. E from Essen makes a gift to his wife. Now, before we make the sketch, ask ourselves who gives that gift. Is it the businessman or is it the private self of E? And we see, well, this is done for private motives, so it's the private person E who makes the gift. So the business person made a withdrawal first to his private self, and the private self then gave on or handed on the gift to wife. So that's happening within the firm, and giving it to wife is later done by the private self of E. So a withdrawal. Then number two is E from Essen allows something to his employee who probably lives near Essen. That's probably taking place also in the surroundings of Essen. And number three is E from Essen sells something with his nephew. The nephew is living in Switzerland, and that means a good goes from Essen to Switzerland. There's a border in between, something which should be especially interesting for us. Well, let's begin with the beginning. Transaction number one, we withdraw a computer, and taxability is easy. We have to test number one as usual. There is no genuine delivery because ownership doesn't change. However, we have to do as if it were a delivery 3, 1B number one. And we have to do as if it were for consideration. Same rule. Both because the computer had entitled to input tax when it was bought as trading stock for the enterprise originally. Then naturally all the rest also is true. E is an entrepreneur, acts within the scope of his enterprise, and the place of delivery to be determined according to the usual rules. Well, where the delivery towards the customer begins, the customer is E and his private self, so that is probably a movement of the good which is very quickly over from the shop to E's home, or even within the shop, at least taxable. There is no exemption which we could see. Nothing in paragraph 4 seems to apply, so fully liable to tax. Next idea, tax base. We need usually 10.1. However, there is no payment made, nothing received in return. So it's clear it's not for consideration, but has to be deemed for consideration. So we can only turn to 10.4 number 1, the replacement of minimum tax base, and that says the purchase price of the thing which you gave away at the moment of the present event. So the price which you now would have to pay for a wholesaler to buy that good again, 750 euro. Then number 4, tax rate and tax. 19% on 750, that's 142.50. Formal aspects, the entrepreneur A is the taxpayer, and the tax arises at the end of the preliminary declaration period during which the event happened. It's a different number from the usual number because you remember number 1 gives you an option if you're a small entrepreneur to choose between the regular taxation and the cash flow based taxation. That option cannot be offered if there is never a cash flow. And so there is a special number 2, which says at the end of the preliminary declaration period during which the transaction happened, this will have to be paid. Naturally, there is no invoice. Declaration duties are the usual ones. You fill out a line about withdrawals in your tax declaration. Nothing special happens which the testing scheme would not cover. And concerning the input tax, we might think about a remark that E keeps the right to full input tax deduction because the output, the sale or withdrawal of the computer has been fully regularly taxed. So we have a taxable liable output, which means that automatically means full input tax deduction. Transaction number 2. An employee uses a van of the enterprise for 2 days. Now the first question is that now for consideration or not? Usually you remember that the usage of a business car is deemed to be, or correctly regarded as being, for consideration because it's not a genuine generosity by the boss. It's a part of the wage and salary negotiations. You say, you get 3,000 plus I finance a car for you, which you can use during private hours. However, this is not the case here. Just 2 days, you get the permission to use a van, which you normally never have. It's entirely implausible that this might be a part of the wage negotiations. It's also not plausible that for this your boss demands a special consideration. So this is not service against consideration. This is genuinely for free. So here we end up with it's a service. It does not need to be deemed to be a service. It is genuinely a service, 3.9, because here E allows his employee to use the car, so you do something for somebody else. However, it's not for consideration, but 3.9a number 1 says, yeah, this is a transaction which has to be deemed to be for consideration. So here the gap is closed. The rest of the conditions for number 1 also is fulfilled. Place of service, 3A1 would be the basic rule. However, for letting a car to somebody else for consideration, that would be 3A3, number 2. If it's only for a short time, then the place of service is where the car has been handed over to the customer, so it would be Essen. And while I think just about it, there might be the alternative. You might say that letting a car for rent does not cover if you give it away for free, then 3A1 would be applied by default. That's probably a question which should be clarified by jurisdiction in the long run, or you might look into a commentary here. So both rules should be acceptable as an answer. 3A1, if you thought, okay, you can't call giving away a car for 2 days for free as a rental transaction. If you thought, okay, letting it for use of somebody else is letting for rent, although the rent is 0. If you said that wording might cover it, then you end up with the solution here on the slide. Both should be possible, and both lead to the same result in this particular case, because probably such a case like here does not quickly go to court. However, the event is taxable, so there is no tax exemption, so it's fully liable to tax. The tax base is 10.4. Number 2 now applies only the costs which have entitled to input tax, according to what I just arbitrarily determined in the case description. This is 150 euro. Tax rate and tax, 19% on the tax base, so 28.50. Formal aspect, the taxpayer is again E, the entrepreneur. The arisal of the tax is 13.1 number 2, because there is no payment, so you can't stick to the usual rule where you have a choice as a small and medium entrepreneur between being taxed on a cash flow basis or on the regular basis. Here you can say, no, only the regular rules can be offered for this if it's without consideration, and it is without consideration. So end of March. No invoice, no special declaration duties, nothing special which the testing scheme doesn't foresee. Input tax, naturally, E keeps the right to full input tax deduction of all underlying costs because the output has been taxed naturally, so everything's fine. Number 3, you sell a computer to your nephew in Switzerland. First question, is it taxable? And the answer is yeah. We have a delivery because ownership changes. We have the place of delivery as usual, where the movement of the computer towards the nephew begins. He begins to take it home from Essen, that's in Germany, so that points to taxability, and indeed all the rest of the 5 conditions of number 1 are fulfilled, so indeed it's taxable. Now let's look on the question of a tax exemption. Here you see, surprisingly, that the good goes to Switzerland. So it could be an export. And the good in question is now transported into a third country. Yeah. The customer is a foreign customer, as defined in 6.2, because he lives abroad. These two things are the conditions for 6.1 number 2. If the customer transports the good into the third territory, then it's only classified as an export if the customer is from abroad. But that's true, so it fulfills the definition of export. Now you remember, I hope at least, that 6.6 paragraph 5 said withdrawals cannot classify as a tax-free export. There is no application of the exportation limit exemptions to withdrawals. However, this was not a withdrawal. This was a sale for a price. However, a much too low price. However, a sale for a price. And 6.5 just says export limitation is banned in the sense of 3.1b. But it does not mention that also transactions covered by the minimum tax base are banned from the exportation exemption. So if you just look to German law, then there is no basis to deny the exportation limitation here, exportation exemption here. And the consequence is that this is tax-free. However, in practice, if somebody finds out, probably everybody will suspect this is a kind of a gap or a loophole in the law, and probably the law has forgotten to state things more clearly here. So one would probably inspect the VAT directive if there is a clear statement on the export exemption for withdrawals and for activities which resemble or which are treated similarly to avoid abuse, or if there is nothing special which gives us precise information. However, based on the mere German wording of the text, you would come to the result this transaction is exempt from tax. on the condition naturally that you can provide the necessary proofs. That is paragraph 6.4, which says the exemption only is granted if proofs can be given, and how the proofs have to be given can be regulated in detail by the Ministry of Fiscal Affairs or the federal government, and that is done in the VAT implementation regulation, the so-called Umsatzsteuerdurchführungsverordnung, referring to paragraph 4 USDG. However, should be possible. Tax base is first the net price, here 600. However, as it is a transaction with a closely related person, you have to compare the net price, the net amount, with the minimum tax base. The minimum tax base would here be 820, so the tax base is 820. However, that has no consequences because, as we said before, if you see things in a very formal sense, then this export is tax-free, and if it's tax-free, there is no tax. Okay, shall be enough for this case. Thank you very much for watching and hope to see you again sometime later on the channel.